FITH, the global central banking think tank, proudly announces the launch of the FITH Digital Monetary Institute. This high-level college convenes key policymakers, technologists, financiers and regulators to explore the challenges, opportunities and implications of digital finance in the 2020s. The principal focus will be on payments instruments in both wholesale and retail markets, with central bank digital currency being of particular interest. Hi Phil, could you please tell me why we think FITH has a mandate to address this particular space on fiat digital currency at this particular time?
Well, it's not just us, John. Of course, it's our members and people in the wider world, because the whole topic of fiat digital currency has suddenly taken on a new lease of life and has moved from the back office right into the governor's office.
What external events have propelled this? Maybe you can comment on the major technology players in the industry and how central bank thinking has changed and the impact of COVID-19.
Well, two big external events, really. One was the announcement last summer of Libra potentially launching, so a private sector currency launched by a major global technology player, which was a fascinating contribution to what had been a debate previously dominated by cryptocurrencies of varying worth. And that posed a direct threat to central banks, in that it was a threat to monetary sovereignty, national fiat currency, and potentially also a threat to financial stability. So central banks had to move from thinking about theoretical responses to actual responses. The second thing clearly that's driven it has been COVID-19, which has spurred a lot of thinking in many quarters, but in particular with national authorities looking very closely at the practicality of helicopter money, i.e. distributing amounts of money to citizens, and not really being able to do it by putting physical cash in envelopes and sending it via the postal system. A lot of thinking has moved to practically how might you do that digitally. So the topic is very much on the agenda of central banks and indeed major private sector companies around the world. And once we get over the immediate hump of responding to the pandemic, this is going to be top of people's agendas.
We don't think the state is likely to find the answers it needs on its own. And we've already seen, as you mentioned, with Libra, that the private sector isn't going to be given a free run. How do you think the two may collaborate to deliver the right answers here?
Well, there will be a variety of models, just as there will be a variety of policy reasons that sit behind launching a digital currency. So different jurisdictions will apply different models. Crudely, that could run from a central bank doing everything, i.e. providing the platform, the technology, running the accounts, running the entire system, to at the other end of the spectrum, the whole business being outsourced almost completely to the private sector, both bank and non-bank. I anticipate many countries will experiment with a kind of system whereby the central bank provides the currency, but the private sector provides the means of delivery. And indeed, private sector operators are also encouraged to operate, if you like, on the rails that are being provided.
FITH, for the last 10 years, has carefully created places where private and public sector institutions can talk together in private, in confidence, and have the right grown-up conversations. And we certainly hope to do that here. We did some interesting work last year already on digital currency. Perhaps you could tell us, Phil, about some of the interesting findings that we already made then, which are now feeding into the work that we're doing now.
Well, we've done quite an awful lot of research, both off our own bat and in conjunction with members, including 18 months ago, research on wholesale digital currencies, stable coin and the like, and more recently on retail digital currency. We've also been looking at the perceptions of various actors, be those central banks, be they technology companies, be they existing payment providers, be they banks, as providers of that. Multitude of results, but I think three big conclusions. One is we will undoubtedly see a central bank digital fiat retail currency at some point in the next 3 years. And it will most likely be from a smaller rather than a larger country, partly because they are simply able to move a lot faster, partly because they're able to make the technological leap a lot more quickly as well. Secondly, we think it is going to be a public-private partnership because neither side can or wishes to do the whole kit and caboodle on its own. And I think thirdly that central banks are going to be front and center here. This is not going to be outsourced entirely to the private sector. And our research indicates quite strongly that central banks are trusted to lead and be the guardians of this kind of initiative.
We found at OMFIF over the years that we've been writing already a very close relationship, of course, between monetary policy, macroeconomic policy, and then on into geopolitics. And this area in particular quickly becomes geopolitical. Would you like to talk a little bit about that, Phil?
Well, I think in two aspects. One, there is an unannounced race amongst central banks to try and define the standard for CBDC, and there is going to be a need at one level for cross-border cooperation. However, for the immediate future, we see things operating largely within national boundaries, which means you'll get a range of different models emerging, and therefore the question of cross-border interoperability arising as well, in the same way as one does on current cross-border payments. The second is, I think some nations are going to see this as an opportunity to extend the remit of their currency beyond their borders. In other words, to challenge the current dollar dominance as the global currency, if you like. So I think that the geopolitical elements in that sense are going to be very interesting and very intense. But the great thing about OMFIF is, of course, that it provides a forum and a college for experts and interested parties from both the private and public sectors to come together in a very exclusive and very private setting and have the kind of discussions that can't be done in normal public fora.
Which is exactly what we're going to do with this. So we will have a number of virtual roundtables and indeed real ones when we go back to our offices. And we're also going to run a symposium that will air all of these themes in private and to some extent semi-publicly where we think there's information that it deserves a broader audience. These themes, Phil, we're going to write about every month with Bhavin Patel.
Well, yes, we have a range of exclusive material coming out, principally a journal where we are going to be looking every month at activity, projects, programs, news within this particular sector. And as well, I think quarterly, what I think is the first ever compendium of CBDC, which is going to be, I mean, it's a work in progress, but it's going to be we hope, the standard directory of who's who and what's what in CBDC. This all of which. all of which will be available to our members. I would say the reason that we are launching this institute is not because we on FITH thought it would be a nice thing to do, but because a lot of our members, both central banks and increasingly private sector members, have said, we really want you to do this. We want to explore this in greater depth and focus on this rather than some of the other things that you do as well. So this is very much in response to what our members are telling us.
You've spent quite a lot of time talking directly with central banks around the world without necessarily naming names. What are you learning about their engagement with us on this topic?
Well, it's a very deep engagement, and it ranges from being able to act as a sounding board for their experts, who find talking to the experts at OMFIF quite useful in just understanding what on a semi-anonymous basis what is going on and where, right the way through to helping with defining, discussing practical use cases as the basis for pilots. So the range of things that we are doing is very big indeed.
We've got a couple of major technology firms already involved, and we expect others. How do you expect them to engage with the public sector institutions in our digital institute?
Well, again, across a very large range. Some wish to discuss technologies, for example. So there's an assumption in some quarters that the underlying technology for CBDC will be blockchain or distributed ledger technology. That's not necessarily the case at all. And in fact, our research demonstrates that a centralized trusted provider in the shape of a central bank is what the public would expect for this, rather than some kind of decentralized ledger. So there are very, to be fair, central banks' primary expertise and stock in trade is not technology. So they are very interested in having those discussions about the uses and limitations of various technologies in approaching this. The private sector are extremely interested in really understanding the policy imperatives and requirements of the public sector. And that conversation, outside, if you like, of a common or garden sales pitch, is very, very important to both parties. And OMFIF is very much a neutral, I hesitate to use the word referee, but moderator and contributor to that particular debate.
Well, we'll chair those conversations with great care and with great interest, and we very much look forward to doing that. We very much look forward to engaging with all of you on this topic and exploring these fascinating themes that Phil has set out for us today. Many thanks.